Most people eventually want to get to a place in their lives where they are financially stable and using their money effectively. Having your first $1,000 in the bank is a big milestone, but what should you do with it? In this video, we're going to discuss 5 things that you can do with your money once you have $1,000 in the bank. The first thing you can do is to move that $1,000 aside into a high-yield savings account. Maybe you'll use it for an emergency fund or a rainy day, or maybe you have a sinking fund that you want to start, or you're saving it for a particular purpose. Regardless of what you're saving for, moving that money into a high-yield savings account is the first step to being more disciplined with your money. So why do I keep saying a high-yield savings account? So if you are just keeping that $1,000 in a checking account, chances are you are probably not earning very much in interest. Now granted, as of when I am filming this, interest rates are low across the board. So even in a high yield savings account, that interest rate or the extra money that you're earning for keeping your money there is not going to be that high. But what you do want to look out for is a rate that is higher than 0.01%, because if you are getting a 0.01% interest rate, that's pretty much a ripoff. A lot of the big banks will barely pay you any money for keeping your money in their savings account, but if you go with a bank that has more of an online presence and doesn't have physical branches, most of those will pay a little bit more than those big bank branches. So once you have an account set up, if you're saving for something specific and it costs more than $1,000, what you can do is determine a fixed percentage of your income or your paycheck that you'll put towards that goal and in that savings account every month. And that way you know that with every paycheck, you are slowly building up to whatever that big goal is. I talk more about how to effectively save up for big goals in this sinking funds video that I will link up here. But if you are trying to save up for a really big goal, a sinking fund is a great way to go. But there are a couple of other reasons that you may want to move this money into a high yield savings account. One could be just using this money as a reserve. In other words, you would be putting that $1,000 aside so that you kind of have a pool of cash that you can pull from whenever you see an opportunity come up, whether that is an investment or something that you could purchase to improve skills, things like that. So using that money as a reserve is one option. Now, another reason that you may choose to move this money into a high yield savings account is to start an emergency fund. If you don't know what an emergency fund is, it's basically having 3 to 6 months of your normal expenses saved up in case you lose your job or want to change jobs, or in case something catastrophic happens and for whatever reason you need that much cash. With an emergency fund, you shouldn't be using that money for anything else unless it is actually an emergency. Something that some people suggest is to put expenses on a credit card, but I would argue that if you are unable to pay for an emergency up front, it's also pretty unlikely that you're going to have the funds to pay off credit card debt from paying for an emergency with that. And on top of that, you'll also have interest that you have to pay if you leave that credit card debt sitting there. So that's why I think it's a good option to put your first $1,000 towards your emergency fund. The second thing you can do with that $1,000 is to get rid of your consumer debts. So credit cards, no doubt, can be a good thing if you use them responsibly. You can earn great cash back rewards, you can earn travel points, and when used properly, it can help you boost your credit score. But for the majority of people in the US, they do not use credit cards properly, and they fall into the trap of getting in major credit card debt. As of June 2020, consumer debt in the US was in the ballpark of $14.3 trillion. That's trillion with a T. So that is a lot of money. So if you have $1,000 in the bank and you also have high consumer debt, it may be a wise idea to use part of that money to start paying off those debts, especially if they have high interest rates. Especially if that $1,000 is enough to pay off all of your debts, paying it off all at once will save you a lot of money from making those interest payments. If you're like, what are interest payments? The financial institutions are not loaning you money on a credit card for free. You have to pay interest on credit card debt, meaning that you're paying extra money for every single month that you keep debt on that card. Credit card companies basically exist to make money, so their interest rates are not going to be low by any means. In some cases, they can be in the ballpark of 17 to 25%. To add to it, if you are forgetful and you make late payments, there are usually extra fees for that. So they just try to get you from any direction that they can. If you decide that you do want to use that $1,000 towards paying off your debt, one popular method of debt repayment is called the snowball method. This is basically where you are paying off the smallest amount of debt that you have, then moving on to the next smallest, and so on until you get to whichever debts you have that are the largest. The benefit of doing it this way is that you kind of motivate yourself each time that you pay off one of those smaller debt amounts, because that's one less loan that you have to take care of. Another method of paying off debt is the avalanche method. With this, you're going to be paying off debt based on percentage. So you'll start with whichever loans have the highest interest rate, and then you'll move on to each smaller one. Credit cards may seem like an attractive offer, especially when they're sending you like a pound of mail a week trying to get you to sign up for these, but it's best to try to stay out of credit card debt. Once you pay off any debt you have, it's good to go back to number 1 on this list and to start saving ahead of time for those goals or those things that you want to purchase. The third option that you have for that $1,000 is to start investing it. Investing your money simply means putting it into something that is going to grow in value over time or produce cash flow for you. But before you start investing, it's good to gather at least some information and knowledge about the subject so that you have less of a chance of losing money. You should definitely determine your investment goals and anything that you want investing to help you accomplish. Doing this will help you determine what your short-term goals and long-term goals are, which in turn will probably help you determine which investment vehicles or ways that you can invest are right for you. All investments come with their own set of risks, so it's also important to determine what your risk tolerance is, or how much risk are you willing to take when you invest your money. And maybe most importantly is to get a really good understanding of assets versus liabilities. So when you're putting your money somewhere, assets are going to be things that will make you money or produce cash flow, and liabilities are things that are going to cost you money or time in the long run. Here are some of the ways that you can invest your $1,000. When you talk about where to invest your money, stocks are probably one of the first things that you hear about or read about. Buying shares of publicly traded companies allows you to share in their profits and their losses. You earn money when a company's share price increases or through dividends, which is extra money that some companies pay out. If you're interested in individual stocks, a couple of options for beginners to look into are blue chip companies and growth companies. So blue chip companies are big established companies, think things like Disney or Coca-Cola. Although they may not give you crazy returns, they're typically viewed as being less risky. And with growth stocks, those have a greater potential for return. A lot of times these are tech-related companies, but with these are considered to be a little bit more risky. If your $1,000 can't buy a substantial amount of shares in these companies, or if your $1,000 isn't even enough for one share, there are still options for you. What you want to do is look for a brokerage that offers fractional shares. This allows you to buy a piece of a stock. So instead of buying one whole share, you could buy half of a share or a fourth of a share. Buying pieces of stocks can be a good way to diversify even if you only have $1,000. And if you're looking for an investment platform that allows fractional shares, M1 Finance is a great option. You can do everything in fractional shares if you want to, and they present it to you really nicely in this pie chart that's easy to look at, easy to understand, and easy to see where your money is going. So if you want to sign up for M1 Finance, I'll have that link in the description. Another option for investing is bonds. Bonds are fixed income investments that you are basically earning interest on for being an investor. You earn that interest over a predetermined period of time, and then at a specified date, you'll get your principal back, or that initial amount that you paid for the bonds. The third option is real estate, and how you earn returns through real estate is often through appreciation or the value of the properties going up. Now, $1,000 definitely is not going to be enough to actually buy you an entire property, but what you can do is look into REITs or look into crowdfunding platforms for real estate. These crowdfunding platforms basically allow people to pool pool their money together into one property or one set of properties, and you're able to take advantage of those profits without actually having to own or operate the real estate. Now, if your money is limited, another option is to opt for different types of funds, especially index funds or ETFs. Investing in mutual funds, index funds, and ETFs allows you to easily diversify without having to have a ton of money to start. Another benefit of this is that you don't have to deal with individual stocks. So a couple of funds that you can look into are index funds that follow the S&P 500 or total stock market index funds. A lot of beginners start with these, and Vanguard and Fidelity both have really good options for the different types of mutual funds or ETFs that you can buy into that follow these indexes. The fourth option you have for that $1,000 in the bank is to invest in yourself. If you invest that money into improving your skills and knowledge, it's likely going to return a lot more than $1,000 in the future. Invest in acquiring and improving both hard skills and soft skills. You could invest in things that help you leverage the internet to make money. You could invest in training or a trade school that gets you a higher paying job. You can invest in social skills too. So maybe that is taking a public speaking class and paying someone to train you how to do that. Another really easy route to go is buying books. So you're probably not going to spend the full $1,000 on books, but you could spend $100 or $200, and the knowledge that you gain from those books is going to last you a lifetime. Another option for that $1,000 in the bank is to start a business. This, I think, is really one of the most underrated ways to invest your money, because think about it this way. If you put $1,000 into starting a business, even if that business generates $10,000 and you're doing it on the side as a side gig, that's 10 times the original money that you put in, and you just aren't going to find those returns in other places. The key here would be to keep your business pretty lean and not have a ton of expenses or overhead associated with it. So some low overhead businesses could be blogging, selling information products. You could start a YouTube channel or even join a freelancing platform and offer your skills on there. Starting a business also teaches you how to start leveraging your money in smart ways, and it can help you feel like you're in more control of your investment because your efforts directly affect how much you're making. The bottom line is that that $1,000 you have in the bank is a tool for you to use really however you want. So hopefully this video was helpful if you want to use that money towards getting yourself in a better financial position, investing for the first time, or starting a business. If you choose to invest that $1,000, use that link in the description to sign up for M1 Finance and start taking advantage of those fractional shares. Subscribe if you like videos like this, and I'll see you guys in the next one.